All right, gang, we're online. We are live. Welcome to the pre-market show for Wednesday. So we're waiting on election results, which means I am doing very little today until we have a pretty clear idea of who the next president is going to be. It's very, very close. Too close to call, as I'm sure you've heard many times on television. I've tried to keep it off. I've enjoyed a lot of Star Trek Next Generation reruns, which are magical. So that's kind of, we're still casual. I don't know how many of you guys watch The Mandalorian. Yeah, it's Mandalorian. Whatever I can do to distract myself from trading in this environment, over trading in this environment. So welcome as always to our pre-market show. All right, so what do we have going on today? Well, I'm going to take it over to the charts here. All right, so what's the plan? I'm still going to be in watch list building mode. That's still very much what my mode is going to be. This really what the election's going to do is, kind of prolong this decision that the American public has made about whoever our next president is going to be, and the markets are going to wait in limbo until we know what that means to equities. Now, here's sort of the punchline. Regardless of how you look at the markets. I think regardless of who's president, we might see a little bit of volatility with an unknown quantity. This is not Republican versus Democrat, okay? This is something unknown is typically going to create a little bit of volatility, a little bit of weakness. And what is known is, well, it's known. It's just less to have to discount. There's less major adjustments to have to make. That's really what it is, gang. I think the markets don't really care who's in the White House. Different sectors might care who's in the White House. What kind of sector is going to care? I think mostly energy. You'll see that there. Energy is probably going to be one of those markets that generally speaking will be a little bit more specific to a certain party in the White House. We're going to see then that distill down to individual commodities like crude oil and RBOB. So that would be the CL contract and the RB contract. You can take a look at USO, but I stopped trading USO when crude went negative and USO had to reshuffle its composition in terms of which contracts are weighted within that ETF. There is still another ETF, which I actually use as a proxy now to the crude oil, and that's the UGA. That's the UGA. And the UGA is unleaded gas. And this I'll use because the ETF is not as screwed up, if you will, as USO had become. You guys might remember when crude went negative, what happened then. All right, so then we have that in play. I think energy is the one that I would be most concerned about. Where do I have less concern? I have less concern when it comes to things like semiconductors. I've been bullish semiconductors for a while. I don't see backing off that anytime soon. Cloud computing, whether you go the CLOU or the SKYY route, there's a lot to like in that. So what is in cloud computing? What is in, say, SKYY? Let's take a look at that together. And I do here is just double check the weighting. All right, so what you see here is my multi-chart grid. And what this allows me to do is take a look at one single sector narrative and then all the individual stocks that are heavily weighted within it. And I think right now we've got Oracle as the number one weighted name, followed by BMW. BABA is up in the top 3. Cool. BABA is a very actively traded option. We've got Microsoft in the SKYY. We've got Amazon. Lots of interesting names in this ETF that not a lot of people pay attention to. Google, and you've got KC, which is Kingsoft Cloud. I see KC and I think Kenny Chesney. For you those of you that are country music fans out there. All right, then I've got CenturyLink, followed by Arista, ANET, And then finally, I think we come up with Akamai. All right. So these weightings do change, and this is not a high concentration weighted ETF, which is unfortunate. I prefer to trade high concentration weighted ETFs because you know more clearly which stocks are going to have a bigger impact on the movement of the ETF. But nonetheless, pretty interesting collection of stocks. And so what I'll do is I'll update these once a week typically. CLOU, and I mentioned that one already. CLOU is a similar type of ETF. However, when you look at CLOU, you will see within the holdings, there's going to be a little different, a mix of stocks in CLOU. But once again, you'll notice that it's not a high concentration weighted ETF, which is really unfortunate. I prefer the high concentration weighted ETFs because otherwise the stocks can move up and down in ranking very quickly. And I'm trying to take a look at what the holdings are. Let's do this together. It's Oracle, a lot of the same names, just in a different order. Yeah. Oh, no, I'm still looking at SKYY. Let me see here. By the way, for those of you that are wondering what I'm looking at on my other screen, it's a site called ETFDB. Actually, you know what? Let me just bring it in here. ETFDB. There we go. So I'm just looking at the list. Some of these I've memorized, but when I'm not in and out of a certain name that often, like SKYY or CLOU, I will definitely have to check back. Now, is there high concentration weighting in CLOU? I was kind of alluding to that. It's not extreme, but it's better than SKYY. So, for example, ZM is 10% of the CLOU. You've got the top three accounting for 10%, 6 1/3, and 6% across ZM, Twilio, and ZS. So then we get to SHOP, Coop. Coop was something I was looking at for a potential buy setup yesterday. But then when you go take a look at the Coop chart, the Coop chain, the Coop options chain, nothing going on. We ended up going with a potential setup on Salesforce, on CRM, which you see is in the 6th place here. So this is the kind of work that I'll do while I'm waiting to see who the next president is. And I may do a little bit more short-term trading. Yesterday, we day traded the Dow DIA puts for a quick short in the morning session. We did the same thing with the IWM. And maybe I might get another opportunity like that. That was nice to be able to be in a position to move to break even, to have an initial profit target on those trades first thing in the morning. Again, by 11:30, that's pretty early. You're not getting a lot of the election information. What is with people who do polls? Can they be any more wrong about what? Golly, I don't know how many of you follow that stuff. It's hilarious. It's hilarious. They're the meteorologists of the election world. It's funny. I wish I could be as wrong as they are and still earn a living. Amazing, just amazing. Which goes to say, we all want to know, right? It's sort of the fantasy football of elections, I guess. As long as we know it's the fantasy football of elections, maybe we won't take it so seriously because we shouldn't. Very interesting watching the psychological effect of the polling data on expectations and the way the markets are moving. So with that being said, what do we have this morning? I'm taking a look at the 1-minute chart of the S&P about 20 minutes before the bell here. What do we have about 1 minute before the bell? Well, one of the things that we've been doing is focusing on exhaustion. Well, we focused on exhaustion on election day because the assumption was we'd probably stay within the hourly price movement range, the volatility ranges. And for the most part in the morning, we did pretty nicely. And I wouldn't be surprised if we do that again because I don't foresee a lot of new information. I think they sent the folks counting the ballots home. I don't know why they can't find shifts to do that. There's certainly plenty of people that would, but go figure. I guess the counting stops at night at a certain time. I don't know. I really haven't been paying attention. I'm not kidding when I tell you I'm watching The Mandalorian and Star Trek Next Generation reruns. It's the only way to stay sane during all of this. Unless you're able to enjoy this like a game of fantasy football, watching the polls and the coverage on television. So anyway, what do I have this morning? What I have this morning is a range going into the open, sitting about 3,400 to the downside and about 3,425 to the upside. I believe that those should hold, but what we've been doing in the room, we started talking about this Monday or Friday. And this was an idea from a member in the Simpler Futures room. And we've talked about this in both the futures and options room. And that is, can we take those historical volatility ranges that you see right here and time them with Ready, Aim, Fire? Ready, Aim, Fire is an oscillator indicator. And what it does is it measures very well the overbought and oversold levels. Now, if you don't have Ready, Aim, Fire, that is a proprietary tool, no problem. You can use a slow stochastic. You'll see I have a stochastic label here, and that's measuring a 21% K and a 3% D. So if you go into the settings, you'll see there's a slot for percent K and percent D, slow stochastic, and that's what you can use for overbought, oversold. And what you want is the Ready, Aim, Fire to be at the bottom of its range, or you want the slow stochastic to be at or below 20 as the market is trading within that hourly price movement range. So we can basically play the back and forth between those zones. The assumption being the market's not going to want to break out of a range until we have a better picture of this next administration. So, and 3,400 is an interesting level. I would presume, as normally we would at a major psychological level, that there'll be some size there, potentially holding price action up. All right. So then next is, oh, look at that. My beloved cat is in the shot. You know, he's got these, I don't know if you guys can see him there, right over my shoulder. Any of you have cats, you buy them comfy beds and cat caves, and he's got a quilt all his own on one of the beds. And I got an Amazon delivery the other day and just kept the box in here. Of course, he's too small for it, but that apparently has not stopped him. That's hilarious. So anyways, you guys he's a celebrity cat. He's a handsome boy. All right. Anyway, so I would expect this market to stay in those ranges. This is the S&P. Now, I'm a little bit more optimistic. I'm a little bit more bullish on the Dow because I am positioned long infrastructure and utilities. It's more of a Dow narrative than it is the tech heavy weighted narrative of the NAS, or even the tech, financials, and healthcare heavy weighted narrative of the S&P. But same idea. Overbought, oversold. I'm looking for the market to stay in that range. However, and we did this yesterday in the chat room, if I'm going to trade this right now, it's going to be using the options on the underlying futures. It could be the options on YM, but when you go into the options chain to look at the YM futures for the December contract, it's not exactly the most liquid thing. And I don't need that much time. I don't need an options expiration to be somewhere at the end of November. So what I do instead is I'll look at the ETF alternative of the Dow, still using the Dow as the market that I'm using as my touchstone to understand what's happening, where the trigger would be, what the setup is. That's still a YM conversation. But then I'm interested in the DIA when it comes to the execution, the order execution. What do I mean by that? What I mean is, once I know the Dow futures, the YMZ contract is in a buy range or in a shorting range, then I go to the DIA options chain on whatever platform you're using. I'll usually have Toss Up or Tasty or even TradeStation. Those are three brokerages that I'm familiar with. I use frequently. And so what I would say then is look at the DIA calls at the bottom of the range at the money and look at the DIA puts at the top of the range. Now, today's Wednesday. We do have the options expiration this Friday. So when you look at the calendar, let's bring this up. On a Monday or a Tuesday, I'm okay trading the Friday expiration. All right, you can see that there. But on a Wednesday, I'd rather go out to the next Friday expiration. Why? Time decay. Remember, options are depreciating assets. The moment you buy them, like buying a brand new car and driving off the lot, it's losing value instantly. And that's why I look at an option. The moment I bought an option, put it in my account, it's instantly beginning to lose value. Now, the rate at which it loses value increases as it gets closer to expiration. I don't ever want to be in a position where I wish I had more time. You pay for time. Your Friday, November 6th option premium is going to be less than your Friday, November. Oh, it's a November the 13th. Friday the 13th. It's going to be more expensive. That 13th Friday expiration is going to be more expensive. So what we want to remember ultimately is that when we're looking at expirations, time decay is going to be a factor in terms of the premium dropping. And if, let's say, you decide, hey, this trade's moving along pretty well, I'll scale out, but maybe it's still moving and higher and higher and higher. Gosh, wouldn't you like a little extra time? So if you want to pay for that extra time, go for it, go for it. So would I anticipate today to be another low volume day? I anticipate it to be until we start getting a better idea about who's winning some of those key states. I assume it's going to be a range bound day. Smoke. Hey, Alex asked, did I stay up late? No, not really. I stayed up till about 11. I think I caught maybe 30 minutes of CNBC's coverage on the election. I thought, you know what? I did sleep in though. That I enjoyed. I'm not going to trade a lot today. When I tell you guys things, it's not just to sound like, oh, let's be on the sidelines I really am. I'm not doing a lot. Those of you that were in the futures room yesterday saw we had a really nice DIA put play in the morning. Really nice IWM, quick little day trades. And then by 11:30, I could kick my feet up on my desk if I wanted to. I wasn't, trading through the elections, none of that stuff. So it's been a little bit of an extended weekend, and I have the time to build my watch list and get ready to deploy that capital that I want to deploy come later this week potentially. So no, I haven't had my coffee yet. I didn't stay up late, but I haven't had my coffee. But nah, it's Cash Wednesday here in the office. It's totally Cash Wednesday. The cat's hanging out with me. I'm gonna go make some coffee. Hang out with my husband. I'm telling you, gang, I'm not going to do a lot of trading. There's a lot. Let me show you something. I'm going to show you something here real quick. And I know some of you've got to go to your respective rooms, but let me show you something. This is what I want you guys to notice is the monthly P&L here. This is for one of my accounts. This account is an account that the typical position size it requires $2,400. So I'm usually buying $2,400 of options, or once I've collected my credit or offset with a debit, let's say a debit spread or even a credit spread. Well, credit spread's obviously going to be a credit, but if I'm in a debit situation, the cost is right around $2,400 per position. And that means each trade really isn't presenting much more than about $1,000 to $1,200 of risk. Think about that for a moment. Notice in April, at a negative month, and I'm happy to show this because April was a month of transition. October to November could be another month of transition. You'll notice my October, I don't have my full P&L here. It's a little bit higher, but not much. October wasn't that good. Why? Because we started to go into transition. So unlike April, which was much more a severe transition out of the glorious downtrend that was wonderful through March, October I started to contract my activity. So this isn't just lip service, gang. So the end of September started to get choppy. You'll notice I contracted my activity. June, July, August were terrific. And this is just one of my accounts. This is one of the smaller accounts that we use. Again, it's a $2,400. I think we have a few positions that were around 1,200. We had a few positions that were right around 3,000, but that was a typical position size requirement in terms of capital. And so you'll notice that I'll start to contract based on the clarity of the market. And so when I tell you guys, it's really, a lot of people got their, you know what's handed to them in October. I hear sad things like, I gave back the last 2 months of gains, or I gave back all of September's gains, or things like that. And it breaks my heart, because my favorite analogy is for those of you that may be fans of NHRA drag racing. You watch a drag racer, when they get out of the groove, when they're in the part of the track, let's say their tires leave the part of the track that's sticky, you'll see the rubber that's laid out on the track. Where they stay in the groove, they've got traction. But when they get out of the groove, they don't hit the gas, right? They don't start to oversteer. They shut it down. That's something we can learn from as traders. When we're out of the groove, get off the gas. You don't have to shut it down, but at least get off the gas. You don't have to hit the brakes, but get off the gas. And there's a lot of, now in times when, like, look how I was sort of hesitant in February. I wasn't doing a lot in this particular account. March, it was time to floor it. June, July, August, floored it. September started to look a little bit, again, we started going into distribution at the end of August, beginning of September. By mid-September, it was far more choppy than the preceding months. So these are things that, and this is one account, right? But the reason I like keeping accounts like this is my husband's trading, and those are his parameters. I taught a class about this a year or so ago, but his learning curve into a cash account, not a margin account, in options. So most of what we do is long calls and long puts. He'll also do some credit spreads and debit spreads now. But anyway, so when I tell you guys, hit the brakes, this isn't lip service. This is me putting my money where my mouth is. And that's really what I recommend you guys do. Shorten the time frames, get more nimble, look for the market to remain in a range. And remember, we still have plenty of the year left. I'm actually quite bullish on the remainder of this year. Does anyone think we're not going to get a stimulus package? Of course we are. Figure it's going to be about a $2 trillion package. Why would I want to short this market? And why would I want to prematurely sit through volatility or pay for the volatility if I can just wait and then enter the market after? That's really the plan. Yeah, Alex, I think, look, to your point, I hope I learned my lesson this October. All I had to do was chill and hold on to my holdings. You know what, Alex? You talk to, 30 years. I've done this plenty of times where I wish I would have shut it down versus hitting the gas or overcorrecting, right? So believe me, it's come through blood, sweat, and tears too. And that's why I'm sharing that. Absolutely. If we can take a lesson like that, Alex, carry it through the remainder of your career, there's always going to be something happening the day after and the day after and the day after. So less FOMO, as they say, and more JOMO. So less fear of missing out, more joy of missing out. And I'm going to have a cup of coffee now. Bell's going to ring. I'm going to wait to see what the clearing does, maybe put on a few fades. But remember, don't overtrade these next few days until we know who the next POTUS is. Okay? All right. So I'll see you guys tomorrow. All right? All right. So I know you guys got to go to your respective rooms. So whether it's the options room or the futures room, I'll see you guys in the futures room tomorrow. And I'll see you guys in the options and the futures room on Friday. Okay. Oh, by the way, tomorrow, before I forget, tomorrow we have a webinar, free webinar. You can check out at simplertrading.com/learn. I'm going to talk about some of my watch list building and some of the results from this account tomorrow. So pretty stoked for that. Have a great one, gang. Be good to each other. I'll talk with you soon.